All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. And man, is Bitcoin pumping today. We had a very volatile day with the FOMC meeting. We also had some announcements about XRP and the Ripple community defeating the SEC and getting that lawsuit dismissed. A couple catalysts in the market to give us this price action to the upside. And we are breaking our local value area to the upside. We are breaking it with some good volume to the upside, and we are coming up to one of the resistance targets that I talked about yesterday. Also, we have been looking at this overall correction from 76.6. I have been looking at this as an overall correction on lower volume. And I was saying the target for this correction for me, a good target to look at, is up near this purple box between 88K and 88.6. I've been talking about this target for about a week now. And of course, we did have some prior resistance levels that were giving us some trouble, but we are seeing that breakout today. And I do have to say, the way Bitcoin looks now, even if we see a pullback from where we're at right now, because we are at a resistance, we might make it up to 88.6. I do think that this correction could continue all the way up to 92K, 93K, and still be valid for a correction before coming to take our 76.6 lows. Overall, I do think the 76.6 lows are not going to be the ultimate lows, but we were looking at 76.6 for a reason. I gave you guys this target. Many of you that were in the Jason Casper Discord, I gave you guys this target before as a major ABC correction target to end. We were looking at longs from this exact level at the bottom. And if you caught that long, then you should be in massive profit now. You should have already taken a couple take profits and moved your stop to break even there. But we are seeing a decent bounce from this so far on this correction. And this correction could continue, and it could continue for up to a couple more weeks before ultimately rolling over and seeing price action to the downside. Now, I do want to talk about, if this is not a correction in the start of a much bigger impulse, with today's price action, that is becoming a possibility, then we need to really break above 93K and flip 93K into support. In that case, if we flip 93K to support, I would be looking at this as, okay, maybe this is a bigger impulse that can bring us up to 100K, 98K, I guess, 97, 98K is the next major target I would be looking at, which is the point of control of our prior range. But let's go ahead and dive into today's price action here first before we get into that. So yesterday, let's go onto our Bybit chart, because the Bybit value area low, this time Bybit's value areas did give us the signal a little bit better than Coinbase's, but we did drop down to the value area low of this range that we've been trading in really since the lows, since 76.6 at March 10th, but I would say even since March 9th. We've been kind of forming this sideways range down here, trying to determine the fair value of Bitcoin. Yesterday, we did drop to the lows, bounced from our value area low, and once again reclaimed our pitchfork midline of our bearish pitchfork. Saw a move up to our point of control. We did get a small rejection, you can see from the point of control, small pullback. Reclaimed our point of control, made our way up to the value area high. Once we made our way up to the value area high, we were seeing some resistance during FOMC, but we broke out with the catalyst of FOMC. Even had a little bit of volatility here where we came back and back tested our anchored VWAP from 49K. Now, I've been talking about this anchored VWAP for a while too as a very important support resistance area that we need to be watching. And I've been talking about how on the daily time frame we had been holding it as support all through here in this range. This is our prior range up in this area. Let's just go to the Coinbase chart real quick. Prior range, you can see I have marked out with this volume profile. And then our current range, it has been acting kind of as a resistance for us. Well, now we have broken above it. We have back tested it. Back tested that anchored VWAP on the FOMC volatility earlier today. Flipped that to support and then got a big volume explosion to the upside, breaking our value area high with a volume expanded candle to the upside, giving us a nice move to the upside. We also were looking at taking these highs of last Friday based off of the 886 touch on this short squeeze here. I've been talking about that 886 touch for quite a while now. We came up here, touched the 886. Yes, that does mean you can come have a correction, like I'm talking now very local. From this area, we did see a correction to the downside to our value area low, but I did say it was more probable now to come take out these Friday highs now that we had had that 886 touch in this area where my cursor was. Well, today we have finally taken out these highs. You can see here, I also did say yesterday, I'm not looking for an SFP of these highs just based off of what we were seeing. I didn't like that because our liquidity was not above this SFP. Our liquidity was in our golden pocket, which we are at and in right now. You can also see here with the volume candle to the upside, we just busted straight through that SFP level. Did not see any liquidity grab there. We did not see a confirmed swing failure pattern. So no SFP equals no trade. You can see we busted above it, even came back tested it as support, and now we're continuing higher. We are continuing higher to a very key level of resistance right now that I do want to talk about, and I have been talking about on the charts for a few days now, maybe even a week. I've been talking about this. So let's grab our volume profile and let's measure the prior range. This range in here, which was our prior fair value for Bitcoin. It was our balance in the market. And you can see now on Bybit, the point of control is a little bit lower. So let's actually go to Coinbase, where I prefer anyways. You can see our Coinbase point of control is right at 87K, pretty much right where our 0.65 golden pocket area is. And I was saying in yesterday's video, in the video the day before, this is an area where we could see a pullback because we did have one liquidity cluster that would end. If we came up to this 87K area, we would completely wipe out that liquidity cluster to the upside. So if we come onto our liquidity heat map, you can see for the last week or so, we have been looking at these two liquidity clusters here, and we've been looking at them as almost magnets to pull the price up to this area. And I did say I want to see us take the liquidity of both of these clusters before overall dumping to the downside and taking our 76.6 lows. Now we have finally come up here. It took some time. We had to be patient with this, but we have come up, and you can see we've completely taken all the liquidity of our first cluster. And this is where we're starting to see some resistance above that liquidity level up into our golden pocket and our point of control of our prior range. So could we see a small pullback from here? Yes, we absolutely could. And if we do see a small pullback from here, now what I would be looking for is, now that we've broken this value area, this range to the upside, in a healthy market, if we do reject from this golden pocket and point of control confluence, we can look for a pullback to bullishly backtest that value area high. Now, if we bullishly backtest this value area high here, that was a horrible line, but you get the idea. If we bullishly backtest this value area high here, and we can hold it and flip it to support, we will most likely work our way up to our key area of resistance that I really think that we can pump to in the next couple of days here. And that would be between 88K and 88.6. Now, I do like this value area high that we also have here at like 90.6, 90.5, because as the pitchfork, as time has gone on, this pitchfork midline here in red, which used to be in confluence with this box, is now raising a little bit more. It's a dynamic resistance level changing with time as time goes on. And the value area high of the range will be in pretty close confluence by the time we get up there. It could be in pretty close confluence with our value area high. First order of business is this purple box of resistance here. Actually, the first order of business is where we're at right now. If we reject from this area, which I do think is possible to see a small pullback from this area, we can look for the value area high to flip to support to hold us to continue higher. Okay, I want to talk about a couple things here, because overall, this whole push up from 76.6 is still overall looking corrective here. But today, with our developments with the catalyst of FOMC, if we turn on our volume here, you can see we are getting some rising volume to the upside. And also, let's go into our CVD chart, and I want to show you guys what we're seeing here as far as today's push to the upside. You can see the entire push for today, this parabolic push that we're seeing on low time frames, Our CVD is rising consistently during this whole time, but this is the important part. Our open interest is increasing drastically with this push to the upside. Now, what does that tell us? That tells us that this is new money entering the market, new positions that are opening that are pushing the price to the upside. We are not seeing a short squeeze right now. We are seeing new money, longs, market longs come into the market to push the price to the upside. This is a healthy move to the upside that we are seeing. Much better than seeing a short squeeze. If we were seeing a short squeeze, our open interest would be decreasing this whole time. And at the end of a short squeeze, if you do not have new money to come in to support that price to the upside, it will usually drop right back down. So we are actually seeing a very aggressive, very healthy move to the upside today. And it is volume supported. Now, this isn't the highest volume. I understand that. But there is some nice, good spikes in volume here. And if we look at our volume in this prior area, oh, didn't mean to grab that one. If we look at this volume, it was decreasing. Yes, we were seeing some spikes here. And then, of course, in all this looked corrective to more a low time frame corrective price action to the downside. But now we are seeing an impulse out of that low correction. And you can see right when we started the impulse here out, like that was the bottom of it. We are now seeing increasing volume here on this push to the upside with an increase in open interest, with a healthy increase in open interest. And this does look a bit impulsive here. This is looking very nice for Bitcoin to continue to the upside, even if we do see a pullback from where we're at now. Or I do think we could even keep coming up to this area, see a pullback from this area, backtest that value area high that we broke to the upside, and then continue even higher. Now, why do I say this now? Because this whole time I've been talking about this whole thing is a correction here. And I am still leaning towards this whole thing being a correction. But look at our money flow here on Market Cipher. Parabolically coming to the upside here. Yes, our momentum waves are looking toppy here on the 1 hour, but healthy money flow like this will always overpower a momentum wave that's topped out and oversold. If we go on to our 4-hour chart, 4-hour chart here, money flow crossing into the green at the bottom of this move here. We're really not quite at the bottom, but towards the bottom of this parabolic push to the upside here, crossing into the green, and our momentum wave's not even close to topped out. Money flow is looking strong, like we could continue to the upside. Also, yes, I know yesterday I was saying these bull divs on the daily could roll over, but with today's developments, you can see that our money flow is now curved to the upside. This is the signal we've really been waiting for to see these bull divs really start to play out on the daily time frame. Now we are seeing that money flow finally get a curve to the upside, and you can see that our momentum wave was trying to roll over. Let's go ahead and pull this up so you can see this. Our momentum wave right in this area here was trying to roll over, but with today's developments, it is now curved back to the upside and is giving us that confirmation that the bull dips still do want to play out. So overall, Bitcoin looking really nice here, looking really healthy. While we're here on the daily, I do want to show you guys one thing here. I was checking out some of my larger time frame pitchforks yesterday, because larger time frame pitchforks are absolutely excellent to find better and bigger support levels and resistance levels. So I was turning on some of my pitchforks, and I want to show you guys, look at where our 76.6 lows bounced from. We bounced from a pitchfork where we broke back into this pitchfork. So let me turn off this volume so you can see this a little bit clearer. This is a very key pitchfork pulled from way back. So let's actually go out onto the weekly here. And this is pulled from the last bull market. Now, this is a bit of a unusual pitchfork, because usually you want to pull it from a high to a low to a, or like if this was a bearish pitchfork, let's just say this should be higher than this area. But this pitchfork has been respected so well in the past. And what do I say? What did I tell you guys in the live stream a couple days ago if you were in Jason's Discord? Anytime an indicator or a tool has been respected highly in the past, it is more likely to be respected highly in the future. Now, you can see this pitchfork here, we chopped around for months, and not for months, for weeks. And in this lower band, we got an explosion to the upper band. We rejected from the upper band multiple times, and we came down to our midline, bounced from our midline overall, broke the pitchfork to the upside, back tested this pitchfork a couple times. The one time that we dumped to 89K here, back tested it to the exact dollar, came up and made a new all-time high. Then we finally broke it to the downside. Well, look at this here. Because this is a dynamic support that changes with time, not being a horizontal line, but being a diagonal line to the upside, you can see what used to be acting as resistance for us on the last huge weekly range that we had back in 2024, this 7-month range in 2024, what used to be acting as resistance, we are now coming down and back testing as support. And we are seeing a nice healthy bounce from this area. So we have, if I would have looked at this before, with that ABC correction target being exactly at the 76.6 lows, as well as it being a major pitchfork band of support, I would have said, okay, this is an area where we could even bounce up all the way to our golden pocket pull from the all-time high to the 76.6 level. So we could bounce up to 98K. And that's where now I'm thinking that if this is going to be a bigger correction to the upside that lasts a month or two, based off of daily bull divs, I think that this 98K area could be, we could bounce on this bounce all the way up to 98K. Now, that is the extreme target for this bounce, or I would say that is not extreme, but that is a, if you want the correction to play out almost perfectly, because we do have some targets before that. You can see the top of the pitchfork now is going to be acting as a resistance for us. And where's the top of the pitchfork? Right at 9,500. And what did I just say was at 9,500? Let's go back to our hourly chart. Let's go to our Coinbase chart. And our prior value area high of our range, as well as our other pitchfork midline, is at 90,500, 90,600. So 90.5 is going to be a key area of resistance on the charts. Okay, back to the pitchforks real quick, because there's even more confluence on some of these pitchforks for this low that we made. So I'm just going to go ahead and zoom back out onto the daily chart. You can see how well that pitchfork band bounced us on a highly respected pitchfork where we had really highly respected it. You can see even here when we lost it, we came back up, back tested it, came down. Let's go now to a different pitchfork. So I'm going to turn that pitchfork off. We're going to look at our second pitchfork. Look at where we hit into the bottom of the pitchfork. Almost exactly perfect here. Almost perfect. And this pitchfork, look at this pitchfork here. This is the same wave 3 pitchfork that I've been following on the Coinbase chart, except this is a modified skiff version. And I did tell you guys in the Discord, if you were in Jason's Discord stream the other day, Bitcoin really tends to like modified skiff pitchforks more than skiff pitchforks. So you can see how well this pitchfork has been respected as well. You know, bouncing from the bands, rejecting from the band here, breaking above, coming up to the upper band, holding this midline for a while, came back down to the band. But look at where we did. The low of the pitchfork is like the ultimate support of a pitchfork, and the high is the ultimate resistance. We bounced absolutely perfect from the low of this pitchfork. And where we're seeing a really nice bounce now, we could come up to the pitchfork where it's about, look at where it is, 90,000 to 90,500, depending on how long it takes. The value area high of our prior range. So now we are building some confluence of supports at that 76.6 level. Now we understand why we could see a bigger bounce from this level. And we are understanding that 90.5 is a pretty key resistance that we could come up to. Okay, let's turn off this pitchfork and let's go to another pitchfork. Let's turn on this pitchfork. Well, this is a even longer pitchfork pulled from wave 1 of the weekly Elliott impulse from the beginning of the bull market, from 16K lows to the highs of wave 1 to the lows of wave 2. It is once again a modified skiff pitchfork. You can see here we hit the top of the pitchfork, dropped all the way to the midline. This is when Bitcoin had its 10K drop in one day, based off of, not one day, in 1 week or 2 weeks, based off of hitting the golden pocket from our prior all-time highs to our bear market lows. That was our golden pocket. So we hit that area there, dropped all the way down. You can see that how well this pitchfork has been respected. Broke it to the upside, back tested it, held it, came up, made some about equal highs here, a little bit lower. But then once we drop back into the pitchfork, you can see the midline overall held. We chopped between the upper band of the pitchfork and the midline, upper band, midline, upper band, midline. Broke it to the upside again. back tested it here, bounced perfectly from the pitchfork, but finally you see we bounced once, twice, and this was a front run, but 3 times this pitchfork tried to hold. And once we finally lost it, we dropped all the way to the bottom. Yes, we did see a wick quite a ways past the bottom of the band, but the band overall held us. And then when we started losing the band, we dropped to the midline. And look at that. We had 76.6 was now, looking back at some of our bigger pitchfork levels, a major level of support. Now, I found that level of support locally by looking at the ABC correction, but we also had other confluences that if I was zooming out on the chart and paying attention, I would have looked for a much bigger, I don't want to say a bigger long because your long should be based off your position size. I would say a much more confident long from this area. Now, I did long that area, and unfortunately, I'm out of that long now. I took profit too early on it, but I'm still in my long on XRP from, I think, 142 or something like that. All right, so, but you can see here, we are coming up into our band of resistance now where we have our local golden pocket and the point of control of our previous range. Now, the top of the band is around 90.5. Once again, that key area that keeps coming in around 90.5. Let's also mark out these lows. Remember how I talked about that distribution, that video that I made about a month ago about the distribution, and you have the lows of your range, or that last point of supply area. This area here is right around that 90.5 area. So we could absolutely come up to this area, back test this area, and roll over. But I am looking now, maybe we do come in this correction straight up to this area. Okay, let's go ahead and look at another pitchfork. Let's turn that one off, and let's go ahead and look at this pitchfork. Now, this pitchfork is a much bigger pitchfork where we didn't hit it as nicely, but the midline held us very nice here. Let's zoom out on this on the weekly chart. And, okay, yes, so this pitchfork is pulled from the prior bull market of March of 2020, the COVID crash lows, up to our 69K highs, down to our 16K lows. And this pitchfork has been highly respected as well. We came to the midline, and look at on the weekly chart how well this midline has been holding us. Yes, we saw a wick past it, but overall, we could expect to see a bounce from the higher the time frame, the tool you're using, or the pitchfork, the more strong that support level is going to be. Now, that doesn't mean, that also means you might see wicks past it on lower time frames, but this area isn't a major area to look for a bounce. Okay, one last thing on this. Why 76.6Ks were so important. 76.6 lows were so important. Let's go into our fib channel that I've been talking about from the entire bull market. This entire 5-wave Elliott impulse in the bull market. We have been looking at this fib channel here. And let's go ahead and zoom onto the daily chart. And you can see just how extremely well this fib channel has guided us through the entire bull market. Come to the highs of the channel, correct to the midline, correct to the bottom, chop between the midline and the channel, come to the highs again, drop to the midline, come to the 1.618 where I was telling everyone we could see a major pullback based off of the 1.618 extinction, drop to the top of the channel, but bounce. You guys get the idea. Highly, highly respected on major levels through the entire bull market. Well, last time we bounced from the midline of our channel, which is this white line, the original channel. Let's see if I have that. The original channel. Well, we can just pull it real quick. Let's grab our channel. We'll go from the 16K lows to our next higher low on the daily time frame. That wasn't perfect. Let's make that perfect. Here, this was the original channel, and I was looking at this channel way before we even broke it to the upside. Like back here, if you guys were in Jason Casper's Discord back then, you understand that I've been looking at this channel for over a year probably. And so when we broke it to the upside, you can say, okay, we broke it to the upside, let's turn on the extinctions. So you turn on the extinctions of that channel. We came to the, all right, let me get my crap together here. Where's that other channel? There we go. All right. Nope, wrong thing. There we go. All right, so when we came to that 1.618 extinction, that was a major level. We came back down to the midline. You can see overall the midline held as support in our wave 4 correction of our bigger weekly Elliott wave impulse. Well, we were looking at, if we did break back down into this channel, we would not only go to the 618 area of the channel, but really the midline is even more important. We'll look at where our 76.6 lows were. We bounced from the midline of that channel. Could we come all the way up to the top of the channel again? And guess where that's at? Around 98K, where our point of control of our prior range is. So if we take this prior range here and we just measure this prior range, you can see the point of control is aligning very nicely with the top of that channel. This is showing me, with all these high time frame supports that we are seeing at the 76.6 lows, that yes, this could absolutely still be corrective, and I am still leaning right now that this is corrective. If we start breaking 88 and 88.6, then I'm going to say, okay, maybe this is an impulse to the upside where we make it up to 98K. All right, back to low time frame stuff, because I know that's what you guys are interested in. So let's go ahead and go on to our hourly chart on the Coinbase chart. Looks like we're trying to break that golden pocket right now. Wow, this is great. Bitcoin's pumping. Actually, let's go to the bearish pitchfork. Now, I've been also talking about this bearish pitchfork pulled from the all-time highs for quite a while now. We are seeing, we saw the reclaim of the midline, and I said we could probably expect to pump up to the upper band. Well, look at where the upper band, the top of the upper band is coming in, right in our purple box area. Let's go ahead and delete this volume profile for a second to clean up the chart. Now, it is a bummer that we did not come down to the weekly, where we also had the Coinbase. Just real quick, I want to say, because yesterday I was saying I still think we could come down to this area. We didn't get it. You don't always get every trade. You don't always get what you want, but we have to pivot with the markets. So you can see the value area low of Coinbase, which I do follow Coinbase volume levels more than Bybit. This time it didn't work out, but most of the time Coinbase does work better than Bybit. But we had the value area low around that weekly, and also we had a naked daily point of control down there. That's why I was looking to come a little bit lower on this drop down to actually hit this area. Now, I know a lot of other really, really great traders also didn't catch these lows because they were waiting for this as well. Like some of the best traders I know did not get into that because of this. So we were all looking at this level. Let's just say that. Now, it got the front run and it did break up. So, oh well, you don't catch everything. You look for the next one. You also could have got in up in this area when you reclaimed, or you could have, depending on how low time frame you wanted to go, you could have found entries in this area, down in this, anywhere up in this pump, but you have to use proper risk management because, well, I won't go into that right now, but you just have to use proper risk management. If you're going to do that, you have to have your plan calculated ahead of time and your stop calculated ahead of time. So if you lose that because you're longing after a pump, but it's off of a scalp, you would start it out as a scalp and let it run. You would have to put your low below. You wouldn't be putting your low if you longed it. Like, let's say you longed this right here, this pullback right here. You wouldn't be putting your long below this low. You would probably wait for that bounce. You would long it about up here, and then you would put your stop right below that pullback low. And then you would probably have a TP1 at the value area high, let the rest run. That's a little bit more advanced. I'm not going to go into that too deep right now. That's very risky to try to catch a trend based off of low time frame scalps. But if you understand what you're doing, you can do it. If you understand risk management and stop losses, you can do that. I would say if you're newer, do not even try. It is very complicated, and if you do start to roll over, you'll get stopped out. Or if you don't have a stop loss and it rolls over, you're really screwed. Anyways, let's go back to our bearish pitchfork. For a while, and in yesterday's video I did talk about this, the midline in this area was acting overall as our resistance. Once we broke it to the downside, it was acting as resistance. Then on Friday, we broke it to the upside, and overall we were holding it as support. And really, we were looking, since this was holding at support, since we had our liquidity clusters above us, we were looking, and since the 886 touch, we were looking for a push up to take these highs. We've done that today. Now the 886 touch is done. You can take it out of your mind for now and wait for the next 886 touch. Okay, but let's look at this whole structure since the 76.6 lows, because now it's like, okay, well, we were kind of looking at this as like all of this was a bunch of three-wave corrections. ABC, you know, ABC with a flat B up here taking the highs of A, and then did we see another A, B, C here, you know, and then this correction, you know, a bunch of three-wave corrections in here. You can see all these three-wave corrections in a complex correction. Complex correction is a series of three waves being a bigger WXY correction. We have dropped, or we held the value area low, and now we can look at this, and because of what we're seeing today with this parabolic price action to the upside on increased volume, maybe we can say, okay, is this an impulse? Well, if it is an impulse, let's entertain this. It would have to be a double 1-2 impulse, a 1, 2, 1, 2, and now you want to explode in your third wave. Well, so far we are exploding in a third wave. So let's go ahead and measure our targets. If this is a double 1-2 impulse to the upside, we take our trend-based Fibonacci extinction. We go from the lows of 1 to the highs of 1 to the lows of 1. Now, I understand you guys are going to say, well, what about this 1-2? You base it off the first 1-2. And you look for the 1.618, which is the wave 3 target of the impulse. If this is going to be a bigger double 1-2 impulse to the upside, we can expect our third wave to possibly come up to the 1.618, which is the most common target. Now, that is pretty high here, and we would be breaking a lot of those really big confluences of resistance that I've been talking about. We would be breaking this purple box that I've been talking about and not really see a pullback from there. We'd be breaking that previous range value area high at 90.5, where we have a lot of pitchfork resistance in confluence with the value area high of our prior range. Wow, that's actually closer to 91. Wait, let's do this. This is actually our prior range here. Okay, 91, yes. So we would be breaking that area with no real pullback. We would be even coming up and breaking our bearish pitchfork with no pullback. We would be breaking our value area low. And I'm not saying no pullback. I'm saying no major pullback. In a wave 3 to the upside, yes, you will see smaller pullbacks. Like, I mean, we could see something like this, come up to this box, come back down here, continue, maybe do this, continue. But you would really want to see overall this bigger impulse structure stay intact. Yes, you could see a couple $1,000 pullbacks here and there, and those pullbacks could even last a day or 2 days. But if this is a double 1-2 impulse, here we are right here, 94K, almost 93.9, let's say that. Well, by the time we get up here, our anchored VWAP from the all-time high would be probably in pretty close confluence with that area. Do we make a wave 3 impulse all the way up to 94K, see a bigger pullback that would last a long time? Now, this is our wave wave 2 overall. You know, you have your 1-2, 1-2. So this time frame here, let's just go ahead and measure out about how long this took. This was, let's see, what is that? 6 days. So usually your wave 4 pullback is longer than your wave 2 pullback. So if we're going to come up to 94K, and that's not going to happen overnight, by the way, that might take 2 weeks to get up there. But if this impulse continues for 2 weeks based off of bullish news and based off of just technicals that are happening on the chart, let me go ahead and get rid of that. Then, and if we do come up here to 94K, we would probably see a wave 4 in that bigger Elliott wave impulse, and that wave 4 might take us longer than 6 days, maybe double that, maybe triple that, maybe 3 weeks of a correction down here. Now you'd want to see a overall bigger 3-wave correction down, or like a WXY, which is a series of multiple 3-wave corrections, very similar to this junk here. And then you would want to see one more 5th wave to the upside. Maybe that 5th wave brings us to our 98K point of control, 97K point of control of our prior range. So that is a scenario that I just want to lay out for you guys that is possible based off of those pitchforks that I showed you being major support levels, for 76.6 being the low, for being a major low or a more major low, and then now what we're seeing with possible impulsive price action to the upside. But I do want to say overall, Bitcoin still does look like, now I'm talking about zooming out to the weekly time frame. Overall, Bitcoin does still look like it's in the distribution. I've talked about this distribution. Actually, this is the wrong chart. Let's do this. BTC USD. We're going to go to the index chart and let's zoom out onto the daily chart. And we are going to look at our distribution here. We have talked about this distribution happening up here near the top of our weekly cycle channel. Let's see, is that the one? Our weekly cycle channel up here. And I've shown you guys this many times on my channel, so you should understand which channel I'm talking about. If you don't, I can zoom out real quick just to show you this channel that has been respected for the entire last 5 years here. And we were at the top, which at the top of that channel, you should expect a distribution pattern if Bitcoin is going to top out here. Or even if it's not going to top out here, but you can still see a distribution that lasts months, drops us back down to 70K, and then continue up higher. But that's still a valid distribution. So let's go back to our daily chart. And if we are seeing this distribution still play out, I did say many times that a distribution does not do this and go straight down like this. You will see small bounces along the way in your continuation. And those small bounces can be $15,000 bounces on Bitcoin. You know, it can be a bounce that lasts a month and then drops. So we are possibly still seeing this distribution playing out. We could just come up to 98K, which is where the top of our cycle channel is, by the way, where the point of control of this range is. See a lower high come in on the charts and continue the distribution down. Now, this will take months. This is not going to happen overnight. But overall, this distribution is still valid even if we come up to 98K, even if we come up to 100K, where we could put in a higher time frame, lower high, and then continue the downtrend. If this is going to be the start of a mini bear market, like I projected, could happen based off of the 2021 cycle. Let's zoom back out to the weekly chart. Let me go on to my other chart here. And let me come in here. Let's turn off that fib channel and let's look at our bars pattern. So this bars pattern here was pulled from this price action right here, from the 2020 to November, from the summer 2020 highs to the November 2021 highs, 65K to 69K. I don't know why that was so hard for me to say. Anyways, that's just this here. You can see that's this price action here. We could see something very similar to that, where we do come down to our point of control of our wave 4 of our weekly impulse. Remember those weekly impulse that we were talking about, with a wave 1, wave 2, wave 3, wave 4, wave 5, topping out at wave 5 at the top of our weekly cycle channel, seeing a move back down to 60K or 50K even, 55K, 58K, seeing a mini bear market that lasts 3 months, just like we saw in here, and then making one more push to the upside to 120K, 130K, and then starting the real push down. This is something that I'm just keeping track of. It's way too early to tell if this is going to happen, but I just want to map it out as a scenario on the charts, just in case it does happen. So that is something we could be looking at. And also, we know that after a 5-wave impulse to the upside, we see an ABC correction to the downside. It doesn't have to be an ABC. We see a correction to the downside. Usually your correction will last quite a while. You know, this is a weekly impulse, so we can expect the correction to last months. Do we see a correction in wave A, the distribution in wave A that takes a few months to get down to 70K, see a bounce, then come down to the 58K area, following something very similar to this in an ABC correction, and then seeing the push up. Like, so this would have to look something like this. We would grab our bars. This would be like this, and we would stretch this, of course, like this. Oh my gosh, what a push down, and then one more push up in an ABC like this. All right, that's just speculation right now. We do not know if any of that's going to happen, but we can look at it as an option, as a scenario based off of technical analysis, based off what has already happened on the charts, based off the wave 5 impulse, based off of topping out at a weekly cycle channel, based off of our weekly bear divs, our monthly bear divs, and the distribution pattern. Okay, going back to low time frames, because I'm sure all of you guys are interested in that. We are pumping, baby. But look at this. Once again, we are finding resistance where we knew we could find resistance. The golden pocket in confluence with our prior range point of control. Now, I do think that even if we pull back from here, just like I said earlier in the video, let's now watch our prior range. This prior range, you could even pull it all the way here. Let's watch this prior range value area high that is coming in around 84,700, I'll say. 84,700. You can also see our prior highs are right around that area. So what used to be resistance, this value area high was acting as resistance multiple times. We could drop all the way down here and flip it to support, hold it as support, and continue higher. That is now what I'm going to be looking for, and that would still be valid for a wave 3 impulse to the upside. You just wouldn't want to be spending too much time in this back test. You probably wouldn't want to spend more than a couple days in this back test here, because a wave 3 can have pullbacks within it, major pullbacks. Now, the other scenario that I do want to talk about, the bearish scenario where this is actually a correction and we are gonna top out and drop and make new lows before even coming up to 93K or 91K or any of that stuff. Let's go ahead and look at this as a possible ABC correction, and we will grab our trend-based Fibonacci extinction, go from the highs of A to the lows of B, and we look at our ABC target zone. We'll look at where our 1-to-1 correction comes in. Between the 1-to-1 and the 1-2-3-6 is where you top out on a correction. Now, I don't like this so much, because in a ABC correction to the upside, what you want to see in an ABC correction, you want to see a 5-wave impulse in your wave A. You see a 3-wave correction in the wave B, and then you see another 5-wave impulse in a wave C, making your bigger ABC. It's a 5-3-5 is what they say. So can we count a 5-wave impulse in here? Not really. It's kind of hard to. You know, I see this clear 3-wave move in here. Then we could see this is an A wave. This is a B flat where we took the highs of A, dropped down for our C wave. This could be another ABC here, but a series of 3-wave moves. I do not see a 5-wave impulse in there. I just can't count it. I'm sure there are some people out there that are much better at Elliott waves that might be able to count that, and that's why I want to leave that on the charts. But I am not counting an impulse in there. Also, in this, it doesn't really account for this area. This looks kind of like a bigger 3-wave move correction to the downside, and now we're starting an impulse. So it is still a scenario that I want to keep have you guys keep in mind, because our 1-to-1 correction target technically is in our box of resistance, and then look at where our 1-2-3-6 is, and that is around our value area high of that prior range. So keep it in mind. I mean, money flow looks so strong right now that I do think this could be an impulse if this money flow continues like this. Because we still have a lot of money flow just crossing into the green on the 4-hour, and money flow is a powerful signal for price to continue. We are so far, let's actually go in on low time frames, because we haven't even discussed this at all. we will look for bear divs here. Are we seeing bear divs here locally? Okay, let's see. From this momentum wave here, 3 lower highs in the momentum waves here. Let's go to that same area on the chart, higher highs. So we are seeing 5-minute bear divs into our key level of resistance. Okay, let's go. That's strike 1, but we want to see more than just 5-minute. Let's go to our 12-minute. Are we seeing bear divs on the 12-minute? No, we are not. Money flow still looks pretty good here, but it is starting to, looks like it maybe want to top out, but it could be something like this where it just does this and comes right back up again. Does this, comes right back up again. So no 12-minute bear divs. Okay, that's a good sign. That's a bullish sign. Let's go on to our 30-minute chart. Are we seeing bear divs? No, we are not seeing bear divs on the 30-minute chart. We are seeing about equal highs on our momentum waves, and our money flow looks very strong. Even if we were seeing 30-minute bear divs, I would say our money flow overpowers those 30-minute bear divs. Okay, no bear divs here. Let's go to our hourly chart. No bear divs on the hourly chart. Money flow looks parabolic and strong. Let's go to our 4-hour chart. No bear divs on the 4-hour chart. Money flow just crossing, looking really strong. So, can we see a pullback from where we're at now? Yes. Is it going to be a major pullback? Well, based off of the bear divs, the lack of bear divs that we are seeing on the chart, I would say no. Okay, so if it's not a major pullback, where can we look at? Let's go ahead. If this is a wave 3, this is a strong trend. Actually, even if it's not a wave 3, this looks like a very strong trend so far throughout the last day and a half or so. Almost parabolic looking. So what do we look for in a strong trend? You look for the 382 Fibonacci bounce. So we're going to go from the lows of the move, the bounce from the value area low to our current highs, where we're rejecting now from this golden pocket. And we are going to turn on our 382, which often acts as support or resistance in a strong trend. Well, look at where our 382 is coming in. Around our prior highs, which used to be resistance. Now if we come down, they will be flipped to support. But let's once again go ahead and throw on our range that we were seeing of the last few days here since March 9th, all the way to current time. You can see the value area high is coming in very close to that 382. So I would say a local box of support to look for would be this area here. If we do bounce from this area, we could expect continuation up to 88.6, 88 to 88.6. Now, why am I looking for 88.6 to be a resistance? Let's go ahead. I'm going to go ahead and delete this fib for now to get it out of the way, and I'm just going to delete this stuff. You guys understand our box of support, local support, could be from 85K down to about 84,650. Let's go now to our 88K resistance. Why is this resistance? Well, we were looking at this structure. Let me grab my pen. This structure as an A wave, a 5-wave impulse to the downside, a B wave here, and then our C wave, where our 1.236 target was the exact reason why we were looking for longs at 76.6. We caught that. We got that perfect. I don't want to say perfect. We got that really nicely. And so now let's look at this corrective structure, this ABC corrective structure. We're going to go ahead and pull a fib from the highs of the corrective structure to the lows of the corrective structure. We are going to turn on our golden pocket, which you know is the most respected fib level, especially on a retrace. Well, a fib is a retrace. So where is that golden pocket coming in? 1-to-1 target, golden pocket. Let's see, what else is there? Well, our ABC target's there. That's what this is here. We have the golden pocket there. The pitchfork midline used to be aligning with it. It's not so much anymore, but our bearish pitchfork band is aligning with it. The top of our bearish pitchfork band is aligning with it. Okay, so we have that. Now let's go ahead and turn on our naked daily points of control. When it loads up, we have a naked daily point of control up there as well. A very high volume level where we understand how important naked daily points of control are. So 88K to 88.6 is a very important level, I would say. Also, I do believe there was something else there. Pitchfork midline, naked daily point of control. Yeah, naked daily point of control, pitchfork band. Okay, yeah, just the 2 pitchfork levels, naked daily point of control, golden pocket, and ABC correction target. Just all that stuff. I mean, that's, just a lot of confluence. All right, so if we come up here, we could come up here and reject, but there is a possibility we could drop down to test our value area low first. It looks like we're seeing a small rejection right now. I do want to say, if the value area low, or value area high, does not hold, then what we could look at next, if this is going to actually give us a bigger rejection, which we are not seeing bear divs on the chart, so we can surmise that it's not, but if it does, let's see, that's 124, okay, 134. I need to pull it to this candle. Where's our golden pocket coming in? At our point of control and at our anchored VWAP. So if our value area high does not hold around 84.6, then our next level I would be watching for support would be at 83.350, where our point of control of that range is in confluence with our anchored VWAP and our golden pocket retrace. So while we're here, we can mark this out right now. And actually, before we even go on, let's check to see if there's any naked daily points of control there. What do you know? There's a naked daily point of control there as well. So we have lots of confluence for support at that level. Let's go ahead and get rid of this to clean it up. We will click on this and we're going to go GP, POC, naked daily point of control, and AVWAP. A lot of confluence down there for local support. Okay, so that's about it on Bitcoin, guys. The reason why I still think we could come higher to 88 to 88.6 is because of our liquidity, our second cluster of liquidity that we have not taken yet. I've been talking about this liquidity for about a week, saying that it is acting as a magnet and that our correction should at least bring us up to take the local liquidity, because what do market makers do? Market makers hunt that liquidity. They like to stop out retail and then continue the move. Well, so far, for the past month or so, our overall moves have been to the downside. Well, there has been a lot of people that have shorted late in this overall downtrend since 109K. A lot of people shorted late in that overall downtrend, creating some liquidity hunts, some liquidity clusters for the market makers to hunt. If they want to still continue to take it down, they will, but oftentimes they will come up. Wipe the liquidity, and then continue the move down. Just like wipe the liquidity, continue the move down. Wipe the liquidity, continue the move down. Wipe the liquidity, continue the move down. So this does not mean that Bitcoin's out of the woods yet. Doesn't mean bull market's back on 200K gold. Please do not let your emotions get you like that, because we still have a lot of work for Bitcoin to do to even start considering new all-time highs. But for now, we are seeing some nice price action to the upside, and we do understand there's liquidity still above us. So with the lack of bear divs and the liquidity that's above us, we do understand that we have a higher probability to come up to grab that liquidity. Okay, I spent so much time on Bitcoin that I don't really have too much time for much else right now, but I do want to cover XRP real quick. XRP is getting a really nice move. You can see last time we covered XRP, which I know I didn't cover it yesterday, but we were looking at our naked weekly point of control as a local support level, and we were actually looking down here as well. Now, I do know, if you go back to my last video, I said I don't like this naked weekly point of control so much because there's not much other confluence with it, but I'm going to keep it on the chart anyway because it is a naked weekly point of control, and those are very strong. Well, we rejected from our point of control. Look at this, a very, very clear three-wave corrective move to the downside. Anytime you see a three-wave move it's more corrective, there is a possibility that you're going to impulse up, a much greater possibility that you're going to impulse to the upside. Now, this does look a bit scary because this does look a bit impulsive here. I know it's going to be a mess to try to count 5 waves in that, but this does look pretty parabolic here, like an impulse. This looks very much like a correction, and this looks like an impulse. So what do you see in an ABC correction? Impulse, correction, impulse. ABC, 535. Well, is XRP seeing a bigger ABC correction to the upside where then we top out and roll over? That is a possibility that we need to keep in our minds, but that means that XRP is probably going to continue a bit higher. Anyways, locally, we came down to our naked weekly point of control. We saw a perfect bounce from that naked weekly point of control. That's why I kept it on the charts, because we know they're powerful levels, volume levels that we need to keep on our charts. We bounced from that area. We knew that we could long from here even before the news came out about XRP winning the lawsuit. So just based off technicals, we knew the area to long. Then we get the crazy announcement about XRP winning the lawsuit, and we pump. Where did we pump straight to? Well, straight to our box of resistance, the key box of resistance that I was talking about. Now, I did have a smaller box of resistance at this point of control here, but I've been really talking about these boxes here and this box here as the main boxes of resistance that we need to be watching on XRP. We have a lot of confluence in this area. We have the anchored VWAP. You can see we came up to it. We have a golden pocket, naked daily point of control, a daily level, the value area high, which is this white line right above us, the swing failure pattern, which we did not grab the liquidity yet. Is it possible that we do this for a bit, come up here, and then make that? Yes, I do think we can come up a little bit higher. Or if this is going to be a bigger impulse to the upside, let's just entertain that real quick. If this is a wave C of a 535, then let's entertain the target. We grab our trend-based Fibonacci extinction. We go from the lows of A to the highs of A to the lows of B, and our one-to-one target. Let me get rid of that one. Lows of A to the highs of A to the lows of B. And our one-to-one target is coming in around 289. And then our 1236 is in our major purple box of resistance. Now this guy up here, look at this. We have a weekly level. We have the value area low of our prior range. That was this range up here. We have the naked daily point of control, the naked weekly point of control towards the top of the channel. The channel's been decreasing as the resistance level's been decreasing as time goes on, but we also have the swing failure pattern of these highs, the Trump pump highs up there. We have a lot of confluence up at this area. So could XRP pump all the way to $3.08, between 289 and 308? Absolutely it can. We'll see if it does though. We do have we do have multiple resistance levels before that though. So we play level to level. If you would have taken a short here, based off the box, you should have already taken a TP1 when you came back down to the VWAP. Knowing that this is a very strong trend that XRP has been in here, if you shorted this box, your TP1 has always got to be the VWAP, because in a strong trend, the VWAP often acts as a support level. Strong trend, support, continue. Now, we still are not, you still probably wouldn't have got stopped out depending on how good of an entry you got here, because you'd want to put your stop above those highs there. But you should have TP1'd when you saw this bounce here. All right, so that is about it on XRP. I mean, XRP looks strong too. Money flow looks really strong here. Not as strong as Bitcoin though. Look at, you can see money flow starting to top out and roll over on the hourly. Bitcoin not even close. 4 hourly here. Money flow looks pretty strong. Our momentum wave's not topped out yet, but it is rolling over more than Bitcoin. Let's just say that. Let's go ahead and pull this up. You can see it's starting to round off more than Bitcoin. And we are at a key resistance. Now, our value area high of this smaller range, remember for XRP, for the past few times I've been covering XRP, we've been looking at 2 ranges. We've been looking at this smaller range, all the sideways price action after that mega dump we had like a few Sundays ago, like 6 Sundays ago, that mega dump. we've been in a sideways range. But we also can look at the bigger sideways range, which I'm just going to take the same volume profile and you pull it of the entire price action within this bigger descending channel. Either way, the value area high is very close to the same area. Now, though, if we look at this bigger volume profile, this bigger sideways range that we're seeing up at the top, you can see that our our point of control. Sorry, I lost my train of thought for a second there. My phone went off. Our point of control here could be acting as a support level now. So if we do pull back from this area, we could see the point of control bounce, and then we could continue to the top of the box. Point of control. Which would also probably be, I'm going to just assume to guess that it's probably our local 382. So if we do a fib pull from the lows to the current highs here, and we look at our 382. No, 382 is a bit higher. It would be the 0.5. But still, 0.5 is a good corrective target as well. Okay, all right, guys, I gotta go. That was my, I gotta go. So I hope this video helps. If you got anything out of this video, please like, please subscribe. And if you have any questions or comments, post them in the Discord. Oh, real quick before I go, someone asked about these volume profiles and what settings do I use. Here's the settings right here. So row size, change it to 200. Leave your, all that does is between all of this highlighted price action here or highlighted volume here, it just gives you thinner lines in between. So it's taking more information based in this volume profile, which yes, it absolutely will change your point of control and your value area high, value area low. Value area, leave it 70, at 70. Some people do put it at 68. I like 70. I've tried both 68 and 70. That's about it. That's about all I change on it. Let's see, style. I mean, you know, I just leave it stock color because I'm too lazy to change it, but you can change the colors to whatever you want. You can see all of this here. That's my stuff there. Visibility, I don't even mess with that. So really all you're doing is changing your row size to 200, leaving at value area at 70 or putting it to 68 based off your preference. Okay, guys, thank you. See you tomorrow.